what Tom Lee did with ETH was ETH has been an asset that all the retailers know. He became the main character, allowing a vehicle for them to invest. Plus, he makes the crypto native or his money that he raised as the driving price action, which people try to front run him or people buy because he thinks he'll continue to pump it, a bit like the Michael Saylor for Bitcoin, right? But the problem with Hype is it's still not an asset that has been long enough to be exposed to retail yet. Retail might not know what a perk is still. Retail might not have access to this still, and there's no main character pushing the institution side of things. Is that...
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
Okay, so do you have any Hyperliquid, Lambro?
I do, but not enough. Fuck.
Man, wow,
Fuck.
Okay. Dude, we'll just jump right into it, man. 2 months, I guess, since March, or I guess like you can argue like late Jan at the bottom, but Hype is now at $56. Is it all-time high? I think it's almost all-time high. Like the last time it was this high. Yeah. Yep. See if it stands here for today, for this week, then it will officially break new all-time high. So this news comes at the back of the fact there's so much institutional demand for Hype ETF. A lot of players have launched Hype ETF. If I'm not mistaken, it was 21 Shares and a couple other players. So 21 Shares Hyperliquid ETF launched only 9 days ago on May 12th, and that already has around 16.7 million in terms of inflows, on top of the Bitwise one that also has 8.8 million of inflows. And I've been hearing there's a lot more bigger names that are going to launch Hype ETF. So I think a lot of analysts are predicting 9 figures in demand this year from like institutions, anywhere from like 1 to 300 million by the end of the year. And this is amazing because if you looked at this, I think this is a great stat, Lambro. So apparently Hyperliquid is now capturing 43% of all chain fees, or 11 million weekly, as perp futures basically out-monetize every other activity. And obviously, this came because of, it's not just HIP3 and tokenization, but war, which makes, like oil, people are actually trading oil on the weekend now thanks to Hyperliquid. And I would share this to see your reaction. Now it's above Sol in terms of FDV. And like one of my good friend, he was like, no, it's not enough. It needs to be above Sol in terms of market cap.
It should be. I wouldn't be surprised it is. I don't know, to be very fair. It's just that I'm very sour right now. I can't comment that much. Like when Hyperliquid was around, like in December or something, around $20-$25, a few of my friends were like, just buy Hype and walk away, and I couldn't do it. Fuck.
Ah man, I should have done it. I feel the same with you. It feels. I mean, like I have some bags, but it's like it's not enough, And then like when you buy it like 25 to like 56, you're like, it's a 2x, whatever.
Exactly.
Yeah. Ah, cool, man.
I hate myself.
What else have you been seeing about Hype? Like, are you paying attention to HIP4 still, the prediction markets?
Yeah. I've been looking at it closely. I think it's interesting, but the adoption point is not here yet. I think it's probably going to be rebalancing in maybe 2-3 weeks or so. Like they're doing some thorough testing, I think. So I don't know, man. Like I there's some part of me that can't look at Hype right now, even though I have not a bad Hype bag, but it just annoys me that I didn't go harder. Because like, this is basically the story, right? Like you trench, you do all these weird things, you jump through hoops, but turns out you could have just OEM Hype.
Yep.
Like, it's hard, man. Life is hard.
Simplicity sometimes, just hold Bitcoin, hold Hype. Yeah.
Guys, if you don't mind, so right now with Hype at the current price, would you still buy more bags?
He's asking a good question, bro.
Depends what your time frame is.
Yeah.
I think like that. I don't want to sound bullshit, right? So for me, I wouldn't, because I feel like I can time the market a little bit better. Also, I personally think the market is due to a drop soon. So like for me, again, I said the same thing a few months ago. Okay, so I might be wrong consistently. Is that for it to go 2x right now is very hard. But for here to drop 50%, well, let's say from here to drop 25% is relatively easy. But for me to see it drop going up 2x is very hard. So the risk and reward is lower than 1 to 2. So I don't like it. But in saying that, if you have strong conviction, you have blah blah blah, you want to go in size, maybe this is the way forward. So I don't know. This is my reply. For me to sleep better and feel comfortable about myself and for my mental health, I wouldn't top blast it. But hype has been proven me wrong many times.
I would give similar answers, but I will twist it this way. It's more of a lesson for me, but also for a lot of other people. I would say you need to be disciplined with your systems and where you bought it. Like, even if you use a very basic daily RSI, weekly RSI, or like whatever, if you like hype in the long run, any of those signals would have made you buy it at like 35, 30, like 28, right? So like, I think if you looked at this and like, hey, can I trade and top blast this because the ETF is gonna bump this way, way, way higher? I also would not do that, because I think the max upside is going to be like 2x, but then the downside is also like 50-50, right? So it's a 1-to-1 trade ratio, which to me, like, I'd rather also like still paying attention to macro, right? I mean, I might be a bit over the line, but a lot of the macro people are still not too sure that the market right now still looks a bit too hot, right? Even on the AI, on gold, and so on. So I would also not top blast it because of that reason. But I should have bought more at like 38, 39, even if it's a bit high, right? If my signal say that, I should have bought it, right? That's my mistake. Because when you really like an assets and you're not trading it like a meme coin, right? So you treat it like gold, you treat it like S&P. I think hype is starting to be in that realm in which like people would always bid it whenever it goes down, right? So if you think about it of like such an asset, then just stick to your like DCA system. Yeah.
Perfect. Okay. I do have one more questions, but
Please. This is good.
Cool.
Dude, like, I think we should incorporate more of this. It's like up to you, Hardy. Like, if you want to have like a
yeah, right. It's more
like an avatar face or something like that, you know, or you can pretend to be a girl and just ask us questions.
No, I mean, sure. I think this is good. Like, I mean, like having 3 people podcast is good as well, because like it really gives the true view.
Yeah.
The more retail, the more DGen, the more institution.
Okay. So one more question, right? Do you genuinely think that hype, because the market is different now. Back in the day when ETH was like BNB, there's not much of crypto exposure yet. So
Yep.
like right now the market cap is crazy, but hype is getting pumped at a different time. Like right now, like hype pumped and right away like ETFs are buying into it. So my question is, do you think that hype would recreate what Ethereum and Binance BNB does in the past? Do you think that's some pump like that is still possible with all these exposure?
Wait, by some pump like that, you mean as high as BNB?
Yeah, let's say like the 200B market cap or 100B market cap.
Okay, so in long run, I can see hype being similar or close to BNB, to be very honest, and assuming the path consistently go through. However, I don't think it will get like a Tom Lee pump, because there's no main character like Tom Lee doing this right now. I think it's fundamentally very 2 different assets if you want to compare it to ETH. From a narrative point of view, I hope more people think like you, but from an actual, let's say, how real is this narrative? Is it first, there's no main character like Tom Lee pushing Ethereum, but hype is a better asset than Ethereum right now due to all its functionality, etc., etc. But I don't think hype is is retail facing enough, right? Like, so if I were to break it down, what Tom Lee did with ETH has been an asset that all the retailers know. He became the main character, allowing a vehicle for them to invest. Plus, he makes the crypto native or his money that he raised as the driving price action, which people try to front run him or people are buying because he thinks he'll continue to pump it, a bit like the Michael Saylor for Bitcoin, right? But the problem with hype is it's still not an asset that has been long enough to be exposed to retail yet. Retail might not know what a perk is still, retail might not have access to this still, and there's no main character pushing the institution side of things. Is that on the track to improving? Yes, I think so. Because of the reason, like you see that picture, that fantastic screenshot where the trader is looking at Hyperliquid price, right? Like, I think those are like the things that is coming to adoption. But I don't know, is that going to materialize in terms of token price in the short-term horizon? Like, I think right now, all these ETFs are for hype. It's not for retail, but it's for institutions that limits them from buying tokens. Whereas for ETH right now, some retail might are actually buying it, MSTR as well, like some retail that are actually buying it because of custodians, etc. Whereas hype is still in like the lower level, where it's like, oh, okay, there's a bunch of funds that want exposure to this, but their mandate doesn't allow them to buy a token. That's why they buy the ETF. And that's my read, right? But yeah, that's why there's more upside in hype in terms of this. But maybe this might change in a few months, right? But yeah, that's my current view.
My view might be a bit more of a cop-out answer, but I think, Hardy, you cannot look at market cap for this. Like, I know market cap is mostly for retailing, they would look at market cap, but like BNB is 88 billion and hype is 50 billion. So I do think hype, if it hits $100, it's basically equal to BNB in terms of like FDV, which I think is still very possible. But, you know, like if you're asking, like, do we think the market cap is going to go stupid? You know, it's going to go like $200-300. Like, I think that's very hard because, I mean, if you pay attention right now, I would still long hype more than not. But CME and New York Stock Exchange is starting to put pressure, right? You know, in terms of like, oh, like regulate, sanction. Oh, the president allegedly is using, you know, like hype to like insider trading and blah, blah. So I think the ceiling, like a more like realistic ceiling would be BNB level, which is like around like 80-90 billion FDV, which is like $100, you know, like that's also like a round number for people's head, right? I think above that is very tough. Yeah.
Okay, perfect,
Yeah.
perfect. That's a very retail question though. Okay,
It's
yeah,
good.
but yeah, that's we can move on to. All right, thanks, thank you guys. We can move to.
It's good. It's
VVV.
good. This is good. Yeah, it's even better if you're like a girl though, but it's fine. Okay, okay, wait.
We're gonna use an AI role later.
Okay, cool. Moving on, guys. We want to talk about Venice token. Last time I was in Venice, it was 20 years ago, I think. But anyway, dude, wow, Lambro. I think we talked about this briefly, right? Cue some like editor stuff. But yo, like we were talking about this definitely like in Q1, and oh man, fuck me, man. Okay, like just to be honest with you, I think I'm more in pain about this than like hype, because man, bro, like it's I think because there's more story here, and I could not believe that we did not punt it when it was like around this area. Okay, but let's take a step back a bit. Like, what is VVV, right? So it was created by Erik Voorhees, one of the OG crypto personality for those of you guys who have been around since 2014, 2015. He used to create like this one wallet. I forgot the name, something with like Fox thingy. It wasn't MetaMask, but like, why is this such a big deal right now? Because the platform has apparently surged to over more than 3 million users, massive API demand, and strong revenue. In fact, some of their biased supporters, well, again, I have to say biased, right? Because like I'm sure they have a bag and so on. But some of the stats basically now their data shows around new sub around $2.6 million a week in terms of their like revenue. The current total ARR is 60 million. The annual recurring revenue is 60 million. Annualized like additions around 200 mil, including like API and so on. So the bullish predictions for some of the holders, like, hey, by the end of the year, they will hit 200 plus in terms of like ARR, and which again would make them one of the best token out there if you do believe that the token holds some sort of value. So they currently trade as of this is I have to give credits to Delphi Jan. This article was out I think a couple of days ago. They're currently trading at 11 times current revenue and 2.5x forward on market cap. Now, what is the point of Venice? Basically, it's they're a privacy-first AI because the founder Erik Voorhees is like an original cypherpunk. He was like a real Bitcoiners. You know, it's like sovereign form of money. My privacy. You should not know about this. Blah blah. He's not like part of this like new age like TradFi suit crypto that like, hey, please buy my ETF. He's like the OG guy. So when he moved to like AI, he's like, man, I want AI that's like privacy first because I don't want to give any of my data into like any of these like companies. So yeah, apparently they do. They have been able to find some sort of like wedge in the market, just like from the numbers of growth and so on. So I'm not an AI expert, but basically what they claim is that instead of building their own like LLMs and like all of these, they're basically creating like an open source model that has zero data tracking, zero censorship, full privacy, chat stays local, and you can do like whatever you want basically there. They have a VVV token that they launched, I believe, almost a year and 3 months ago. It was very hype, like at the time, but then of course, like similar with like other tokens, it fell, but its price has since like recovered very nicely, especially in the past couple of months as their revenue grow. So what is the tokenomics? Basically, VVV you can stake, and you currently get around like 15% to unlock the pro features. Right now, lock and stake VVV is used to mint a token called DIEM, like similar to the old Facebook project, DIEM. And each DIEM gives you $1 of daily API credits in perpetuity forever. So basically, they're trying to, which again, I'm always a big fan of this. I like when a business try to attract some value to the tokenomics, right? I think we all can learn from Hype. I don't know how sustainable it is for their business in the long run. It would need like a deep dive, like from us to really look into that. But it's interesting that each DIEM token gives you $1 of daily API forever, right? So like, I guess if you have a lot of VVV, that means that you will always have compute in the long run, like forever with Venice. Again, we need to look into like how their tech stack is actually being built. Can they take that away from you and so on? But it's an interesting concept. So Lambro, you've been using a lot of Cloud Code and like all these AIs, right? Like, do you care at all about like privacy?
I do. That's why I use a anonymous profile to use AI for things I don't want to be tracked. Like I actually have like 3-4 different AI accounts, so they don't connect.
I'll cut you right off the bat. If you pay for Pro, they know you right away. It doesn't matter, right?
Yeah, but do I use my own credit card?
Ooh, okay, got it.
like that's the key, right?
Yeah.
Okay, so the reason why I didn't look at this is because I think performance matter.
Yes.
More in AI. Whereas like maybe there is some use case for privacy, but I initially thought it was too niche, too early for this. I agree it's a narrative, but like fuck, I really jaded at this, like because of how so my thought is that like just like people back in the days don't want to give everything to Google, but right now everything is Google account, Apple account. So I don't think privacy is a main issue, and even it is, it's a small niche or a B2B product. Okay. And that's why I did not look deeply into this. But in saying that, due to the price action, I'll be looking into this deeply.
Do you think it's gonna catch up, or at least like, do you see a future? Let's say we're like 2 years from now, right? Like 2 years from now, like OpenClaw and like Anthropic model is like insanely good, but then like the open source one and the private one is as good as like their version right now. Will you? Like, do you think?
I don't think it will get to that stage. My belief is their commercial put. Okay, there might be, let's say, 6 month local models were good. Like so what happened is that somehow okay, this is my view on how things work, right? So like it's like commercial will go like this, and then they go flat, and then some autistic guy will be like, oh, open source privacy is future. They're gonna catch up here for local model. But because this guy is just one guy, not a corporation, and not like making like tons of money, he's gonna chill. And then this guy is gonna go up again because it's an actual corporation. And then so eventually you're gonna be one step back. Like remember the time where people were buying PCs for like localized models and shit like that? And then after like 2-3 months when Claude came out, like that kind of low-key died again. And then Claude didn't really do any update for like a few months, and then suddenly there's a localized model that's very good again. But like it's just, I don't think it will be compatible. And then like as a user, right, if I'm a hardcore AI user, do I really want to switch cars every fucking 3 months, even though I'm doing that right now? And that's why I don't think privacy as a slower horse is applicable for me. But maybe I'm not doing too much illegal stuff.
No, it's good. Yeah, so Venice don't really build any of their models. Basically, they only focus on the inference layer, which is like all the hot things. If you guys are like AI nerds, it's basically like training and then like inference, right? So they host and provide private uncensored access to already existing open source model, like Facebook Llama 3.1, DeepSeek, and so on. So like obviously they're not going to be as powerful as OpenAI or like Anthropic, but let's say if the Chinese open source model like DeepSeek continues to like perform, because I do think there's like incentive from the Chinese side to like continuously make like a cheaper 80% there of these models, then players like Venice can just continuously build on top of that and build their own like inference model to make sure that like everything stays private. So that's a pretty interesting business strategy, I would say. Are you trading SpaceX?
No, I'm not. No edge. Bye.
Are you
edge,
trading?
bro? Just long.
Are you trading SpaceX, Marco?
No. Let's see here. I need to go back into more like trading, like if you guys want to talk about it. But like I've been focusing on being a builder, unfortunately.